Well, I think MicroStrategy's view since 2020 has been that the only institutional grade investable asset in the crypto space is Bitcoin. Bitcoin is the universally, globally acknowledged digital commodity in this industry. I think it's pretty clear that the regulators don't see a legitimate path forward for cryptocurrencies like the stable coins, crypto securities like the tokens mentioned. They don't have any love for crypto derivatives. They don't have any love for crypto tokens, and they have a view of crypto exchanges which is far constrained. I mean, their view is crypto exchanges should trade and hold pure digital commodities like Bitcoin. And so the entire industry is kind of destined to be rationalized down to a Bitcoin-focused industry
Well,
with maybe a half a dozen to a dozen other proof-of-work tokens.
Bitcoin has been trading in a narrow 3.4% range for the past 3 days after successfully defending the $25,500 support on June 10. At this time, investors' attention has shifted to the macroeconomic area as the United States Federal Reserve will announce its interest rate decision on June 14. Cryptocurrencies might work independently from the traditional finance markets, but the cost of capital impacts almost every investor. Back in May, the Fed raised its benchmark interest rate to 5.25%, the highest since 2007. All eyes will be on Fed Chair Jerome Powell's media speech 30 minutes after the rating announcement, as markets are pricing in 94% odds of a pause at the June meeting based on the CME FedWatch tool. Hello, and welcome to Money Talks. In today's video, we have Michael Saylor and Gareth Soloway talking about the SEC's actions against crypto. Saylor says regulators have no love for Bitcoin or crypto. So without wasting any time, let's get into the video.
I think there's been a lot of confusion because of the 25,000 other cryptos and because of all of the crypto securities that have been angling to position themselves as the next Bitcoin or a better Bitcoin. So now I think that the public is beginning to realize that Bitcoin is the next Bitcoin. The next logical step is for Bitcoin to 10x from here and then 10x again. So eventually, I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space. And their business models are fine when Bitcoin goes up by a factor of 10. And, we can see that the dominance of Bitcoin in the crypto economy, as measured by coin market cap, has moved from 40 to 48% this year alone. But I think that as the stable coins and the tokens go away, that long-term dominance is headed for 80%. And I think what you got to remember is the reason that we don't have mega institutional money flowing into this space is confusion and anxiety. When that disappears, you're going to see mega amounts of money flow into space, and the business models will be just fine focused on Bitcoin.
chances are the Fed doesn't raise rates, but I think that they will be hawkish because, number one, I don't think they like the rally in the stock market. I mean, when you see these tech stocks getting these crazy valuations again, it's just whether it's money coming from crypto or it's just new money flowing in, there's a wealth effect that occurs, right? When you see your 401k up 20%, you start to say, oh, maybe I can buy that new car, or maybe I can buy that new TV, and it creates a demand surge that, if supply can't keep up with it, causes prices to go up. So, I think that would be something to pay attention to. And then, like you said, the question is, does the Fed actually stay the course? And for me, unfortunately, I'm doubtful. I think right now it's easy, right? You have low unemployment, you have good jobs numbers for the most part. So it's easy to say, yeah, we're going to stay the course. Show me an economy where you have 6% unemployment,
Right.
and people are really struggling even more so, and then tell me that the Fed isn't going to come off the sidelines. And I agree with you. If that would be the worst case. I know people want it, but one of the things that I always try to input into people is that cycles are natural courses, right? Bull markets, bear markets, business cycles, those are naturally occurring. And if you don't screw with them, I'm a big believer that it's much more like a rolling hill, right? It's when you have the Fed coming in like they've done, and we saw this in 2007 and going into 2008 in the financial crisis, is when you have the Fed artificially kind of doing things that create longer bull markets, where the bull markets get crazier, the liquidity, the risk taking gets crazier. That's where you get the bigger, so it becomes much more like a Mount Everest, like up and then a collapse to the downside.
The upcoming Federal Open Market Committee meeting isn't the only concern for the economy, as the U.S. Treasury is set to issue more than $850 billion in new bills between now and September. Additional government debt issuance tends to cause higher yields and thus higher borrowing costs for companies and families. Considering the already restrained credit market due to the recent banking crisis, the odds are that gross domestic product growth will be severely compromised in the coming months. According to on-chain analytics firm Glassnode, miners have been selling Bitcoin since the start of June, potentially adding further pressure to the price. Among the potential triggers are reduced earnings from a cooldown in ordinals activity and the mining hash rate reaching an all-time high. Investors now question whether Bitcoin will test the $25,000 resistance, a level unseen since mid-March, and for this reason, they are closely monitoring Bitcoin futures contract premiums and the cost of hedging using BTC options.
I think that there's a massive need for exchanges to help people acquire Bitcoin and custody Bitcoin, especially as the pension funds, the insurance companies, the banks, the institutional investors get into the space. Companies like Grayscale need to have a custodian. So I see a lot of bullish things for Bitcoin on the horizon. I think the accounting treatment, the upcoming halving, the explosion in the hash rate, and also the clarity that has come out of the SEC of late is actually laying the foundation for the next bull run. And there is a place for crypto exchanges to help people buy Bitcoin, sell Bitcoin, custody Bitcoin. And I don't think that's going away. I think that's going to be a great business. We use a variety of institutional grade Bitcoin companies. We work with Coinbase, and we have worked with Coinbase. We have a number of institutional grade custodians as well. MicroStrategy has been kind of special in this regard because unlike, say, an ETF or the like, we're able to access the Bitcoin spot markets and hold Bitcoin, and we're also able to access the equity and the debt markets as we pursue our Bitcoin acquisition strategy.
Normally, a 3% futures basis and a 6% delta skew would be considered bearish indicators, but that is not the case given the extreme amount of uncertainty regarding the economic conditions and the recent charges against Binance and Coinbase. The Securities and Exchange Commission, SEC, alleges those exchanges held unregistered offerings and sales of tokens and failed to register as brokers. U.S. lawmakers have criticized the SEC for its heavy-handed approach to crypto enforcement. On June 12, Rep. Warren Davidson proposed a bill aimed at restructuring the SEC by firing Chair Gary Gensler and redistributing power between the commissioners. The uncertain crypto regulatory environment remains a hurdle to attracting institutional investors. Furthermore, the recession risk for the U.S. economy limits the demand for risk-on assets such as Bitcoin, increasing the odds of the $25,000 support being tested.
Well, we're an operating company, so we have a profitable software business, and so we can sweep the cash flows of our software business into Bitcoin. Our aim is to allow institutional investors to get Bitcoin exposure, but without charging them a fee and generating a yield when we can. And because we're able to tap the debt markets, we're able to issue debt. We're also able to refinance or pay back our debt, like when we retired our Silvergate loan earlier this year. We're able to issue equity when it's accretive. We're able to purchase Bitcoin with cash flows when it's accretive. So those are our flexibilities you have as an operating company. If you're an SEC 40 company like an ETP or like Grayscale as a trust, you can't really do those things. And I mean, the result is, Bitcoin is up 55% this year to date. MicroStrategy is up 92% this year to date.
So is it a good time to invest in Bitcoin, and what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.